a brief introduction of the panelists who are going to support this conversation today, and then I will leave it to you to do the crunching of the issue. So to lead the conversation, we have Mr. Jechitano, who is well known in the policy space. He has just started a new project as policy research advocacy coordinator at the Hand and Brain Action Research Initiative. Until recently, he was the head of political economy unit at Third World Network, specializing in research and advocacy on structural transformation in the context of Africa dependency within the regime of circuits of international trade, financing and a primary commodity value chain. He has been actively engaged on a wide range considering the impact of globalization issues in Africa for more than 2 decades, and in policy arenas such as ECOWAS, AU, NEPAD, NECA, UNTAG. I mean, he's been all over. He has also been involved in natural resource issues in the sectors such as mining, fisheries, land, and water. He has been a key member of the Africa Trade Network, a leading non-state actor on trade and investment issues in Africa since the era of WTO. So Mr. Tano will lead the conversation as the moderator with his opening perspective on the subject around oil. We have discussants from one, Mozambique, Fredo Nuvunga, who is part of the governance family in Africa, very committed to the issues of Africa's development. He is a scholar and leading civil society activist in Mozambique. He is a director of Center for Democratic Development. I deliberately avoided the Portuguese version of it. A civil society organization working on democracy, development, economic governance in Mozambique, focusing on youth agency. Until May 2018, Professor Nvunga was the director of the Center for Public Integrity, a anti-corruption civil society organization in Mozambique. Professor also teaches political science, governance at the Department of Political Science and Public Administration, Monlandi University in Maputo, Mozambique. He also teaches the extractive industry, anti-corruption, and human rights nexus at the Technical University of Mozambique. His area of expertise include Mozambique oil and gas sector, democratization and political governance, election, corruption, anti-corruption, and youth empowerment. He has published scholarly articles in journals and also a member of Include, which is the knowledge platform on inclusive development policies of the Netherlands Ministry of Foreign Affairs. We also have Winfred Ngabiri from Uganda to also help us with the Ugandan context. And she is also a very active person in the space of governance, a human rights activist with over 16 years experience in development and natural resource governance work. She holds a master's degree in human rights and a strong advocate for social justice, inclusiveness, and accountability in the natural resource governance regimes in Africa. She brings to her role as executive director at the Global Rights Alert in Uganda, a member of the Publish What You Pay and the campaign coalition on oil and gas, where she's also very active. Winfred is a member of Ugandan EITI multi-stakeholder group and has been named among top 100 African women pacesetters in development. So Winfred, we are thankful for being part of this conversation. We also have another active woman in the space, Ikal Angile. She's the founding director of Friends of Lake Turkana, an environmental thinker, activist, philosopher of science, and ecological policy advocate who has key interests in environmental justice, resource governance, community rights. ICAO's other interests include political ecology, analyzing the politics and human ecology of ecosystem management, and institutional aspects of natural resource governance. She works towards increasing the participation of grassroots and local communities, and I wouldn't be surprised if we hear local today, and governance of natural resources. She's keen on understanding the interrelationship between politics, good governance, sustainable resource management, and exploring approaches to ensure equitable access, control, and ownership by local communities. She's the winner of the Goldman Environmental Prize in 2012, and currently a PhD candidate at the University of Leicester, research into the political ecology of oil, the struggle for land and livelihood in Turkana's pastoral commons. We are also lucky to have Mr. Salom Muna, another friend of ACEP and also the development community. He has appeared on many platforms that ACEP has offered, and today we have him to be part of this. He is the Public-Private Partnership Coordinator at the Ministry of Energy, Tanzania. He's a certified PPP specialist and an energy business and investment analyst. He is currently the country project coordinator for a cross-border pipeline from the district of Hoima in Uganda to Tanga Port in Tanzania, dubbed the East Africa Crude Oil Pipeline Project. He's also the chairman and moderator of the government negotiation team of international oil companies investing in the pipeline. Mr. Muna led the signing of the International Project Agreement Treaty around the project. And prior to that, he was a project analyst for energy projects at the former Ministry of Energy and Minerals in Tanzania. He also has experience in banking, private commercial banking. So we have key individuals who can do justice to the subject. So to take it away, I will hand over to our moderator and key speaker for today, Mr. Yakitano, to get us going. Thank you.
Thank you very much, Benjamin, and greetings to one and all. Very glad to be participating in this very important and timely discussion. I think many of the key issues have already been sketched by Benjamin's introduction, and indeed ACEP's concept that no doubt all of us would have seen. And it starts obviously from the reality of the downturn in the oil and gas sector, which has been accelerated by the COVID-19 pandemic. Of course, in a sense, we know that there already were downward pressures, or if you like, recessionary pressures in terms of international oil markets before the pandemic became global, or was declared to be global. And I think that any way that we ought to make sense of events has to take into consideration not just the specifics of COVID-19, but the wider way in which it sits and accelerates tendencies which are more deep-seated and which were there before the outbreak of the pandemic itself. So in as much as it is correct to, first of all, let's reiterate some points. I think it is perfectly correct for Benjamin to give emphasis to the immediate trade shocks. The trade shocks obviously translate into fiscal shocks in terms of revenue and so on. And he's perfectly correct. So in Ghana, where both Ben and I come from, the government faces, not just the government, but the oil sector faces a reduction in its value of up to 74% this year. The values produced this year will be projected to fall by 74%. Now, that's a huge shock to the system. Obviously, it has knock-on effects in terms of the wider economy and the macro growth indicators and macro stability and so on and so forth. We can get into that. The other point is that the fiscal shock leads us to consider wider implications such as think about sustaining investment, create or protecting jobs, think about ensuring that there is social investment, especially in the time of the public health crisis that we face, and that there's social protection nets for vulnerable communities, and to keep our societies cohesive so that there is some degree of cohesion, that we can weather the storm together and then go forward together. So that's definitely another set of considerations that we ought to bear in mind and we ought to touch upon as well. But the first thing I want to do is to look at the kind of context of the oil economy, the global oil economy, so to speak, prior to the conditions that were antecedent or prevail of, that the COVID have come to intersect with. We know that there was already downward pressure on the price, and the downward pressure was, expressed itself as a price war between a price and production war between big players like Russia and Saudi Arabia. Okay, and that from their point of view, one of the potential benefits of that was to render American shale, U.S. shale production suddenly uncompetitive in price terms. Okay, so those who are big enough in terms of the share of production, in terms of their price efficiency and other factors, are able to take some of these geopolitical, long-term strategic decisions which impact everybody else. So the question of geopolitics actually, I think, is one in which we have to think about, because as Africans and for Africa, one of the key considerations of how we sit in oil and gas as well as global commodity markets generally is the vulnerability that we face because of the fact that we are not in a position to actually call the shots in terms of production, in terms of different facets of the streets. So there's that dimension which leads us to another as such, but it also to the those themselves. And it's not only about price. I'll give you an example. Between those two countries that I've mentioned, Saudi Arabia and Russia, they have very different price profiles. In fact, Saudi Arabia is the one that is supposed to be the most price competitive, the cheapest marginal cost of production. However, the Saudi economy is much more dependent on oil as a source of funding, of development funding, as Benjamin mentioned, because it is a less diversified economy. So even though Saudi can sustain cheaper production, the fiscal break-even point for Saudi is $80 per barrel of oil, because of the other commitments outside of oil that oil feeds into for its economic growth. It is very different from Russia. Russia is a less efficient price competitor than Saudi. Nonetheless, it is competitive enough, and because it has a far more diversified economy, its fiscal break-even point is half that of Saudi Arabia, $40. In other words, if the oil market stays where it is, in 16 years, it has begun to climb up again. I think today it was reported to be $40 thereabouts. If it's, let's say, $35, many are going to be back. Saudi, because of the wider economic implications that I've talked about, in terms of the fiscal feed-through, the fiscal dependency on a different on sources of oil. That should alert us to two things. The reason why I introduced it with these two global considerations is two things. We should not listen only to the price and immediate revenue impact. We should also see what others are doing and consider where our strategic options are. In other words, people are restructuring in terms of the industry itself, number one. People are restructuring in terms of the interconnection between the oil and gas industry and the wider economy. When it comes to restructuring between the industry itself, that is not what the African response has been so far. But oil and gas players in Africa are already restructuring within the African market itself. So we take, let's say, a country like Uganda. We have seen what Tallow across East Africa has, the kind of things that it has been trying to do. I mean, in Kenya, for example, it has finished with this early oil pilot scheme, and that the exploration is over, and now this is about full field development. It's a normal, and therefore it is trying to extricate itself from, it is trying to leverage its successful completion of this EOPS, this early oil scheme, to be able to sell some of its assets and so on, itself from, unwind some of the debt that it has as a company. I believe it has gained from the point of view of its value book, from the point of view of the claims that it can make in terms of its successes in Kenya, point of view of the venture partnerships that it has developed to be able to do so. So if you take Uganda, for example, the same Tullow is selling its assets. It's in a three-way partnership with Total and with China National Offshore Oil. It is saying okay, without any objection from China National Offshore Oil, which suggests that China National Offshore Oil is probably retrenching or not being as aggressive in terms of its capital investments in Africa going forward in the immediate term. But Total is prepared to do so. And therefore, Total's stake will increase by, I think, about 11 or 12% in terms of Ugandan oil. Already, it commands 66%. But the Ugandan government or no other entity in Uganda is present in this restructure. The whole equity share, and therefore the whole political economy of benefits of even the interconnection between different facets of the oil circuit, exploration, production, logistics, transport, marketing. Those are the companies in a position to do so. When Kenya sold its oil the first time, August 2019, it was a Chinese company that bought it. The Chinese company bought it to sell onto a Malaysian company. There was no Kenyan company involved. You see what I'm saying? So these are there's this restructuring going on. But however, if you look at our concern, because of our concern with revenue and with the fiscal side of things, we are not necessarily pursuing an agenda of restructuring. We are not looking at how the circumstances that exist allow us to restructure. Because Ben is right to say a lot of production will be closed down, slowed down, shut down or shut in as the industry balance goes. Every operation that can afford shutting down production. So I'm saying that there may be elements which gives African entities leverage to actually restructure those things. But if we're only looking at the revenue and fiscal side, and we're not engaged in the restructuring of the political economy of the industry itself, who owns what, who commands which part of the value chain, who has capacity to integrate different facets of the industry, then we lose out. So we might be interested in, let's say, the reprofiling of our fiscal revenues as relates to oil and gas. So take Angola. I know there's an Angola expert. Yeah, I want to know more about Angola. But if you take what Angola is doing in terms of, its negotiation for debt reprofiling with the G20, it's not negotiating for debt relief. It is saying that we need new instruments and new way which are payments so that there's less pressure on immediate terms. But to do so, Angola has to actually engage with the reprofiling negotiation with its oil importers and oil companies first, before G20 will even give it a hearing. In other words, it's Angola's dependency on the revenue side alone, because it is blocked in onto the revenue side alone. Whilst the others, the transnationals, are restructuring, whilst the creditworthiness of those companies is not impacted immediately by what happens in Angola. Everything is dependent on this situation. So that's the kind of broader vision that I'm hoping that our conversations here will enable us to take. That we should move away. We should link our concerns about revenue and fiscal shock to the concerns about restructuring the industry itself, ensuring that where are the points through which we can gain entry to leverage to ensure that more of the equity, more of the value chain comes under our control. Our control increasingly. And I think that it's also important to point this out, because a lot of the times there's a big contradiction at the heart of the oil and gas industry. On the one hand, it is becoming increasingly fragmented. When I imagine Tullow, for example, obviously this is a company that focuses on the exploration side. Time was when national oil industries sought to have an integrated industry across from exploration all the way down to marketing and so on and so forth, refining, so on and so forth. Now, obviously, it's been broken up. But in as much as it has been broken up, those who are at the center of multinational trading and multinational financing are able to accumulate from the different aspects, the different facets, and the different steps in the value chain. So you take a country like Angola, again, apart from the debt that I'm talking about, is Angola's attempt to there's ongoing investment. That there's not a massive downturn. The investments in refinery capacity in Cabinda province, for example, are continuing. It's in charge. It's because it is continuing this process. It's increasing its claim about the value of the investment that it is making. But the Angolan government is not necessarily in a position to do so. this company is not even an oil and gas company to start with. If you go onto the website or you go to tell you the company in charge has designed different tech aspects of this refinery, it has done this in this technical way, it has done this, but actually it has none of those competencies at all. It is an independent investment consulting and management company. A company called Gemcorp. And this is the company which is calling the shots in every aspect of whether or not, this process will go forward. In other words, the fragmentation that I'm talking about means that there are those who command strategy simply because of the role and that they play in the financialization process, in the financial markets globally, in the investment regimes and so on. And each of these aspects are detached from one another. Only the big multinationals are players in across board, and therefore they can integrate from the point of view of the system as a whole, while we go cap in hand at every different aspect and so on. The last point I want to make to kind of close this thing, close the introduction, is that even now, as we have these crises of, if you like, being behind the curve in terms of restructuring, being behind the curve in terms of assessing and leveraging position, being behind the curve in terms of and interest of the global, even the aspects of investment that are still within our capacity, I'm not sure that we're taking full advantage of it. And it's important to be able to do so. If you take the case of Ghana, for example, primarily because the two things have dominated thinking about oil revenues ought to be managed and how they ought to be used. The first is that there ought to be savings against a rainy day. So in Ghana, there are things like the Heritage Fund, which the government now is trying to extract from and so on. I'm sure Benjamin will be talking about some of those things. And by and large, a lot of the revenues from oil and gas and other commodities have gone into sovereign wealth funds. Now, sovereign wealth funds operate themselves also like investment funds. They look at the highest return from something and so on. So the process of but the only way in which you are generating that wealth to start with is that real production and real productive assets are in play. And those who command the productive assets and the production process usually have higher claims, even on the resource reserves that nobody else is talking about. So one of the dangers of the oil and gas industry right now, the write down of the value of reserves. In fact, it's supposed to be a pretty massive write down from about 14 trillion or dollars worth, from about 39 trillion that the current valuations are to about 21 trillion. So it's massive. Okay, but it tells you again that what goes on is not simply about the production. It is about those who are in a position to ensure that they are beneficiaries of the financial trading and so on, and those who are in a position to guarantee certain shareholder value upon which that trading takes place. Those are areas where we are absent. And even we have the accumulated capacity, so some leverage, some entry point, so you're actually beginning to participate and gain from some of these gametes. We don't actually do so. So our sovereign wealth funds today still hold excess, mainly oil and gas producers in Africa. When things began to look like, they're overextending into, and they were worried about their credit rating, whether there'll be a downgrading of their credit rating agency and so on, began to pile up even more foreign reserves. They began to pile up even more foreign reserves in assets that have a net interest income. For example, US paper, US Treasury paper. Whilst in our own continent, we know that actually you can get a lot more from investing in assets. Ghanaians were investing in Angola and vice versa. It might make a lot more sense. So we do not have a development banking up, which says the revenues from those should go into diversifying economy, build up our investment capacity in the way in which production of real goods, services is generated. Nor are we, because we are not doing that, we are not also developing the technical skills involved. So Tullow Oil is the one, and its partners will harvest all the data, the logistics, so on, the operations in Kenya and Uganda. There will be a marginal play by local firms, but basically we won't be controlling that process. We will lose out on the financialization, the financial rent side as well. We will lose out on returns and the new investment arenas as well. We will lose out on the restructuring. Now, all this puts immense pressure back on the macro economy, because it is not simply about the stock of revenue that you are getting. It's also about its predictability, its volatility, your vulnerability to shocks. And at the moment, even if we increase our circumstances, we will increase our revenue, or we stabilize our revenue. structural factors, we will be vulnerable, and therefore the kind of downgrading of investigations is going to be mitigated because we are stabilizing the revenue or the fiscal side. So I think these are some of the things that I wanted to put on the table. Yes, we are right to be concerned about the revenue and the fiscal side, but in so doing, we also have to see how we leverage this process to do three things. One is to ensure, as I said, that we initiate some restructuring within the oil and gas sector itself. Two is restructuring in terms of its linkages, which include investment patterns, job creation, the things that Benjamin was talking about in the wider economy. Three is to look at the totality of the global value chain in terms of trade, in terms of finance, and see how much of that we can insure back into Africa, and how much of that we can actually begin to make a play for. And so far, we actually abstained from being able to do so. So I hope this, and sorry to mention all those countries where there's actual expertise on the table. I'm sure you elaborate from where I started from. Thank you very much.
All right, thank you very much, Mr. Tano, for this elaborate points that you've raised. But I think you can go ahead to let the discussions come in.
Yes, of course. Sorry. Yeah. So the order of play. Oh, sorry, I don't have my. Ben, can you help me out here?
So Professor Nunga will come in
yes.
from here with the Mozambican context. Right. So, Prof, you can take it from here.
Thank you very much. I hope you can hear me.
We can, yes.
Yes, yeah.
Greetings from Maputo, Mozambique. I'll be brief and succinct. COVID-19 is produce and monetize that. There are serious challenges. Even before COVID-19, Mozambique's prospect to produce and monetize its gas was being seriously affected by governance. First is the heavily illegal borrowing that the previous government had been engaged in, and that has seriously affected Mozambique's prospects. Not only in terms of making the international oil companies and the national oil companies in a difficult position to get the necessary financing, but also the cost at which that financing was being contracted internationally. But also is the issue of the speed at which developments were taking place. And next to this is the insurgency that is taking place, unfortunately, in the northern province of Cabo Delgado, which is seriously affecting, it is kind of scaring a bit, and reducing the initial shining of the project there up in the north. So even before COVID-19 and the international decline of commodity oil prices, Mozambique's world-class gas reserve was facing some challenges. And as I've said, most of which related to the governance of the previous government. The current government has tried to keep a momentum, but there were serious challenges. So with COVID-19, it's impacting in a manifold ways. We have been expecting that one of the global majors which is Exxon, which is partnering with the Italian Eni to take its final investment decision last year. That was initially deferred to end of last year. I'm talking about an investment of up to $35 billion that's expected to come. But that was deferred initially, and now it was put on hold and to an unknown future. So, and this speaks to this company's strategy to reduce expenditure due to COVID and also geopolitical dynamics that our moderator has already referred to. So not only this is happening, but also and again, even that there are some positive dynamics related to some of the expected funding that is taking place, but more generally going is moving at a relatively positive speed with the construction now in the phase of assemblement in offshore Mozambique. But the overall prospect is that of seriously impacted particularly by Exxon's decision to kind of put the final investment decision on hold, and of course it will have a serious impact, not only in the timing of government revenue. I understand moderator is such not only in the revenue side, but considering Mozambique's situation, positioning, heavily indebted and not having other ways of getting out of that situation, Mozambique expected to quickly monetize its gas in order to get out of that situation. So that not only is not happening at the expected speed, but also that will be seriously impacting in a context where Mozambique's projects, because of its least developed infrastructure, but also impacted by the situation of the debt I have already alluded to, Mozambique's capex is one of the most expensive, and all this will seriously impact not only the timing, but also the size of government take. And again, a lesson here is that to have world-class gas reserve is important. It's a blessing, but that is not enough for emergent markets to quickly monetize and cash substantial revenue and use it to move out of the poverty trap. I've been talking to local producers who have been expecting to supply in the framework of local content to supply goods to the industry, but they are being seriously impacted since international oil companies, they are downsizing, and with that happening, they are reducing the uptake of local production and also jobs and other positive effects that were expected to have. But again, it is not only COVID-19, it's not only prices that is there, is serious, but also governance from the previous government is seriously impacting on the prospect of Mozambique to monetize and get out of property as benefiting. Thank you.
Thank you very much, Prof. If I may, in addition to your addressing of the country context, and the fiscal implications and so on. I mean, I hope when we come back, the question of jobs and the various aspects of the wider economy we can touch on. Thank you very much, though. For now, I'll ask Ikal from Friends of Lake Turkana to take up the conversation.
Thanks, Jechi. Thanks, Prof. Yeah, I think I'll give context. As Ben said, I always have to speak about local because the oil is in Turkana and various things. At the moment, again, before COVID, the oil company Tullow was struggling. Tullow and its partners, Africa Oil and Total, was struggling. At first, we thought that Tullow was going to sell to but the reason Tullow was not going to sell to Total say they weren't going to buy it. We know as of now, there is an interest from about 20 Chinese companies to buy out Tullow. In the recent weeks, we've seen the company give a force majeure to the government in a way to renegotiate its tax, the fiscal agreements with the government. And this is, I mean, we expect, I don't think government didn't seem to expect it. We expect something that we are now questioning. Are these resources that we talk about, blessing or curse? Are they any blessing? Since 2000, so Turkana is an 86% pastoral economy. And it's with the drought, we've been able to build our resilience. But since 2010, we've seen a shift. A lot of the Lokichar Basin, people who are typically pastoralists, are struggling to deal with now COVID, deal with the drought, deal with a lot of things, but more when Tullow closed down, the pastoralists are struggling to deal with the lack of jobs, the economics, the lack of social protection, no money from the oil sector. And it really shown the belief that the oil economy, which we all know is an enclave economy, provides jobs, stimulates the economy, because at the local level, it's not stimulated the economy. In fact, it's left people more destitute than they were before. At least then they had their livestock, they had their livelihoods. But because they had this creation of, we need to leave on the pastoralism and go and get casual jobs within the oil company, now they are most affected. It is so bad that shops within Lokichar area, will open and say, sell 100 shillings. That's $1 a day, which wasn't there before, because at least a herdsman would sell the livestock and be able to purchase food. So we are seeing at the local level that the economy, the whole oil perception within this economy really disrupted the local livelihood and the local economies. So we are really concerned about this whole idea about oil being a stimulator of the economy. The other thing we're seeing is, as Jechi mentioned, the early oil pilot scheme. Charles Wanguhu, who's the platform coordinator of the civil society, has written about this, around why we've always thought that the early oil pilot scheme was never really a venture to support anything. It was really somebody trying to make money. So the trucks that carried the oil, the entire value chain that was being created from the early oil pilot scheme was just a scam, which the oil company was going to make its money and the political elite are going to make its money. But in the end, trucking oil from Lokichar to Mombasa and shipping it off to China, which sold it off to a Malaysian company, was really of no benefit to the economy, was no benefit to any sort of employment. In fact, the local residents were struggling to make up at least 30% of the drivers, which is really peanuts if you take it from there. But what we are also seeing, again, going back to what Jechi mentioned around the selling it off to the Chinese, what we're realizing is we thought about it at first that the government was going to borrow against expected revenues. And now it's coming out very clearly that a lot of the current push, right now there's a pipeline being built when we have, no one's thinking about oil, but we're still struggling to build the pipeline, which means taking land from communities. We are a pastoral economy. That means land is pastoral commons. And as it is, the government is now trying to create laws that zero rate the value of land. So if they take land to build the pipeline, it means that the community gets zero. And yet, a lot of the grazing, the entire survival here is based on the pastoral land. So for us, we sort of are seeing it as one, left all its responsibilities to Talo was by community, which the tracking has gone into the cost oil. That means that government is unable to fill in that gap and provide water to the community. So even in this time of COVID, when you're saying, wash your hands, community is saying, where's the water to wash our hands? Yet Talo is no longer here. So you can see the space that the oil company took over from the government, and now it's left that gap. I guess it sort of goes back to what I heard around when we let the companies take over from government. What happens then, and how does that affect the actual resilience? And if you're going to say that the oil economy is going to fit into the to building the wider economy, how is it happening when it's being fragmented in ways that Talo comes in, government steps out? And that's a very critical thing that if we don't address, we then will start to look at the oil as one thing and everything else. It is so bad that we've seen people in the north of Turkana, who again depend on the southern side where the oil is, really have delinked from the area because they felt that all that land has been taken away from them. So, and yet even Kenyans in other parts, they sort of like, that's just Turkana oil. And if anybody looked at the cartoon by Gado in 2009, when the president first announced that there was oil in Turkana, the first thing that came out of many of the women's mouths is, where is the water? Because you're talking about oil. As it is, for the oil in Turkana to be taken off the ground, we have to get water from the Takwel River, which this is a water scarce area. So I think for me, the current crash in the price of oil also allows us to rethink, and as Jechi said, restructure, but let's really rethink how this works for us. And it may be in some places that the resource works, but in some places, considering this oil in Turkana was found in 1980, 85 or thereabouts, and it stayed on the ground up to date, we have to start asking ourselves, is it of value to do this? Is there any real benefit to the citizens? Do we really get jobs? Because most of those people who employ in the oil company cannot get employment now from here. And everywhere they go, if they're to go into Uganda, Ugandans will say local content. So where then do this population of young men and women who've gotten employed for the last 6-7 years get a job from here? And can we sustain this sort of local content and the same time trying to think through how the oil economy links to the wider agricultural economy and other sectors of the economy rather than oil on its own? Because as it is right now, I don't think a coffee farmer or a tea farmer in Kenya can link anything to the oil in Turkana. And that for me means that it no longer is of value to this country. Thank you.
Thank you very much, Ikal. Just for when you come back later, might you be interested in taking up the question? Slow down, or if you like, dislocation, offers a new opportunity to rebalance these links that you have demonstrated are missing at the moment. Maybe is this an opportunity? It's well worth thinking about that going forward. Okay, I'll thank you very, very much once again. I'll ask Mr. Salum, from our colleague from Tanzania, to take up the conversation for the next 10 minutes. Thank you very much, Salom.
Thanks very much, moderator. Thank you, Ben, for the invitation. I'll give you a different perspective, and I know Tanzania in Africa has always taken a different position, but even in this case, to the COVID-19, I think Tanzania probably is the only country that have taken a different position, and we are living with that decision that we have made. So when we speak about oil and gas in general and the value chain of oil and gas in Tanzania, probably everybody is aware that in Tanzania we have gas in upstream, and we are close to our neighbors in Ruvuma Basin there. And most of the gas that is currently being produced in Tanzania is actually produced on onshore, and about 60% of the gas is supplied to the industrial users, and also for electricity generation, and probably about 60% of our energy mix right now, more than 50 to 60% of it is coming from what we produce, we actually consume here in Tanzania. Even though in the future we're talking about exporting that gas to Uganda, because Uganda have oil, of course they've discovered oil, and they do not have a gas. So this is a future plan to look into the region as well, in order to supply for gas. And Kenya, Mombasa have been looking for the industrial consumption of Tanzanian gas. Having said that, when you look at what has been happening today, since we had a new government in place, there was some shift in policy, changing on the policies, trying to review and getting the contract, for example, reviewed. Our PSA were reviewed, and explorations in Tanzania actually was stuck a bit because licenses were not renewed for some reason. And this PSA review has been concluded, and most of the companies now are already renewing their licenses. And when you look at the fact that the momentum of the companies is still there, and we still see the interest to develop the next LNG. I know you Mozambique, our colleagues, are ahead of us, but we are also looking into developing and start going into the development of our own LNG. And most of the investors in the upstream are already receiving their licenses. So we expect soon to start negotiation on HGAs, and the national oil company has already compensated the land that will be used for LNG. So this has been moving. So we have been actually moving smoothly. Since the pandemic. We look at Uganda, moderator, you have mentioned it about the tallow farm out deal, but ECOP project is in a momentum right now. We are conducting HGA negotiations as we speak. We're doing now. So in that case, there's still much of interest. And if the effects that have come in that case, it's only coming from the fact that we don't physically meet. So we don't have a physical meeting we used to have, but now we are doing and we're progressing through online, and we have seen it working. Our colleagues in Uganda have started, and on our side, we've been observing what is happening, and probably we're going to do it the same for our HGA in Tanzania. So having said that, I don't see that there was much impact on Tanzania when it comes to COVID at this point, especially in upstream. Most of the, for example, most of the sales that were happening in upstream Tanzania, we had the only one that has happened. In this case, it was happened before. It happened before the COVID came into place, so we wouldn't say that is because of the COVID. There is a slowdown, of course, a temporarily shutdown of development of eco project before, but this was not because of COVID. It was because of the fact that the sales and purchase agreement of your tallow oil before the deal was failed, and that was the reason. But any changes or any impact to the oil and gas, especially in Tanzania, we cannot record anything that we can associate it with the COVID, because in Tanzania, even after the COVID came in, our approach was a bit different. What we did is people continue working and taking care of themselves. We only shut the universities and secondary schools, primary schools, but now we have reopened university since yesterday, I think. Yes, it was 1st of June. The university students are going back, and the high school students are going back, and they're expected to do their exams. So all other businesses were continuing as there was applications of public transport, but now things are going to normal. Public transport are actually regulated at this point of time that people should be using. They should be having passengers at level seat instead of having others standing up on the bus. Basically, that's what has been happening in Tanzania, but I'll be happy to take questions and touch some of the things that probably you would like to know more about what has happened in Tanzania at this point of time. Thank you very much.
Thank you very much, sir. Wonderful use of the time. By the way, where you are sitting in relation to the reflection of the sun, it's difficult for people to see you. So maybe if you can reposition slightly. Yeah. Okay. Thanks very much. And I'm sure we'll have a lot of questions for you. I admire your confidence about the resilience of the arrangements in Tanzania and how they are not likely to be impacted in any significant way by these earth-shaking developments everywhere else of the globe. So hopefully there'll be some interesting questions for you as well. I'll now ask Winifred to us through the next 10 minutes presentation. Thank you very much.
Thank you very much, the moderator and the organizers. So for Uganda, I think we discovered oil in 2006, and up to now, production hasn't started taking place. We are currently thinking about the pipeline, which will come from Hoima, the Albertine region where oil is, up to Tanga in Tanzania. And there are negotiations between Tanzania Tanzanian government and the oil pipe company. So those are going on. But what we do not understand from the civil society perspective, for example, what is that we are negotiating for in these agreements? What was it that we are looking for? From there. And we know that Total is a very big player in the ECOP, in the pipeline project. And so they are taking a lot of, they are taking many decisions. They are promising to put in a lot of money. And as you said at the start, they have also acquired Taro. But we don't know whether they acquired shares, or they acquired interest, or they acquired rights. And we don't discuss for them to discuss issues about Taro with Uganda, and we have Taro as the leading player together with CNOC. We also have the final investment decision that is being pushed over and over. It's taking a lot of time. We are not having that. I think companies are against a wall. They're tying it to the farm down from the Taro, and they're also tying it to the oil pipeline. I think really those could be different. The oil investment could go on. Companies have the capacity and abuse to engage those two. So this leaves Uganda really very vulnerable if they do not have very good negotiators at the table, and if they do not have a very strong stand on some of the aspects. We did get some money from the farm down, from the sellout actually, about 14 million US dollars. But it's capital gains tax, yes. It's against because some of the information to profit we got, this is the amount of tax we got after certain costs were deducted. Information around oil and gas is not as available as probably in other countries. And with the EITI application that is going on now, Uganda is set to submit the application probably by end of July. We hope and we see that as an opportunity that is going to us with much information to both civil society and the public and parliament, to use that as a tool to talk about the monies within the oil sector, talk about the investments, talk about the licensing that is going on, and so that we can both play the oversight role as well as contribute to shaping the agenda. We also, we have not seen oil companies, invoking the force majeure as in Kenya. Probably they are not as much hit as, so, but we are still waiting to see how that goes. But we also know that they are in direct negotiations with government. So probably government is going to be a little bit softer. They can attract investors. Already the licensing round that was expected has been pushed twice. The competitive bidding has also been pushed, extended. And so we see companies, they are likely to go for direct negotiations, and anything can go when it is direct negotiations. So we need to understand that and engage with our governments and indeed have a strong position that we are advancing as a country. So Oranto, for example, they have suspended the exploration, and other companies like Amma Energy has also suspended exploration. And so the country has to think ways of attracting, attracting them back or attracting new investors that would want to come and invest in a country like Ghana, which does not have a lot of oil. We have discovered over 6 commercially available is about 1.4 billion. So we're not going to be very big producers, and yet we have to build the pipeline, we have to build a refinery, and we have all these investments that are going on. Before COVID, of course, there was a land acquisition which was going on for the pipeline for the over 1,450 kilometers pipeline, but that has been suspended. And if I'm to be as local as ICAL, is really to ask, so now what happens to people whose land was already earmarked for acquisition, and suddenly nothing is going on? And no one is going back because we don't have interfaces. So no one is going back to tell them that this is where we are. You can use your land, you cannot use your land. This is when we are coming back. So as an ordinary person, they are wondering what next? Are they coming? Are they not coming back? And that, of course, at a family level, at a community level, it impacts on their ability to produce food for them to have livelihoods as they have been, them to go to into the market. Companies, they investors affected. They hired rigs, they bought machinery, they prepared. Some farmers group had been set up, some agricultural associations had been set up in preparation to take over and supply and have a stake in the oil sector. But over the last 10 years or so, we don't see much happening. So we have a number of investors in the oil and gas sector who are genuinely frustrated because of the delay. And now with COVID and the shares, the oil prices going down, we don't know how long this will. The oil sector does not have very many jobs. it's very intensive. We don't have very many jobs at the moment. But I think what we need to look up for is how can Ugandan businesses have stake in the investments that are happening. How can they have partners that have money and can invest here, and so Ugandans can also be part and parcel of the investors in the sector. We see that we are looking with Tanzania in the pipeline, as I said, but Tanzania seems to be giving up, wanting to give as much exemptions on the upstream as they can, and the impact on Uganda's ability to earn any substantial amount of money if Tanzania gives up many exemptions to investors. So that's an issue that is of concern to Ugandans. And also, we need to, as I said at the start, what are we negotiating for in the pipeline, in the companies in the pipeline, but also when we are talking about the financing decisions, as much information as possible. We have a habit of using the money that is available, so I've already used some of the money from oil, without necessarily following the procedures. And the only money that we are getting now is the signature bonuses and the capital gains tax. And yes, we might actually use it to boost the economy because of the economy, the way it has been affected by COVID. So that's a concern, and we hope that Parliament can be strong enough to and open their eyes and play their oversight role. But also the other question on the other hand is, should Uganda borrow money to start up the economy after COVID? Money is going to come at a high interest rate when actually we have money that has come from oil and it's within that in Uganda, in the country. That's, I think, an interesting issue that people have raised. It's something that we can discuss, but it's not something that we encourage that let Uganda spend the money because it is there. It's something that Parliament can take on and make sure that there's legislation that allows for that, because it would mean revising the laws that we have, reviewing the laws that we have to enable that. So on one hand, we need our economy to grow, to come back after COVID. We need to see that the oil money is used well, but we also need to ask ourselves, where do we get this money from? We already have 400 something million US dollars from IMF. And so they gave it as part of the credit facility to Uganda to recover from COVID. So we need to see how is that money going to be utilized, and at what rate are we getting? And I know that we're going to probably get money from other lenders. So we need to look at that and see how that money is going to be utilized. We have CNOC, the Chinese investors in the oil sector. They are doing a lot of work in infrastructure. They are doing a lot of work, in energy, in dams. And, there is, so people think that, we think that the oil money is what is being looked at as money to serve, because, Chinese are building all these infrastructures on loans. So we expect to be already looking at what's going to come from the oil sector to finance some of the loans that we're already getting. And the foreign license, what does that mean? If our oil cannot service these loans, then what else goes? You have had examples of Zambia, Chinese strategic resources. We do not want to see that, and what they have gotten going into servicing loans would have avoided if we wanted to negotiate and get better loans. So yes, we were delaying even before COVID. COVID has come, it has affected us. Company use that as made to be very strong and have our interest at heart and have very good negotiators and have a very good negotiating model that each negotiator, whether a minister of energy has changed, whether a technocrat has moved from one to another, they can still interest from the oil sector. I think that's what I can probably for now. Thank you.
Yes, thank you very much, Winif. And that's a rich menu of very interesting things that you've raised from the point of view of ranging from governance and participatory governance arrangements all the way to, you touched on the tax regime. It would have been interesting to hear more about around the question of capital gains tax, the issues around the capital gains tax issues. I'm wondering whether that is what might have informed the difference between the Chinese companies, the Chinese different decisions in Kenya or Uganda. We can explore some of these things. You mentioned debt and so on. So thank you very much. I'm sure there'll be many, interesting questions for you when we finish. I'll now ask our last speaker before we open up for the question and answer session. Benjamin.
When happened last year?
Right.
Yeah.
Thank you very much. I will come in. I think.
And we're running about 10 minutes late, so.
Yeah. So
not to put pressure on you.
I'll just be as brief as possible.
Okay.
Because the context is virtually similar from what has been said already. Ghana is also being impacted in short term, medium term, long term. For the short term, we know the impact that is having on the budget. In 2020 alone, the finance minister estimates that Ghana is not going to get about $1 billion that is projected to receive. So the projection was 1.5 billion. And if you're not getting 1 billion, that means that two-thirds of what you projected to receive is not really going to come. So that is significant for the budget. And that leads us to the conversation about how do you fill that fiscal gap in your budget. So already 1 billion has been taken from the IMF fiscal package, to be able to cushion government against, the impact that comes along with revenue shortfall and the fight against the COVID itself. So borrowing may continue because you're not going to get what you projected to receive, and you need to fill the gap that has been occasioned because of the shortfall in revenues. In the medium to long term also, Upstream, we are supposed to have about $4 billion investment with Aker Energy, which should have started this year. And all of a sudden, COVID comes in. So that investment has been put on hold as we speak. So the impact in the short term will be on the service companies, the Ghanaian enterprises that would have benefited from procurement this year. They're not going to have it. If you look at government projection also into the medium term, all the fiscal numbers account for potential revenues that we would have received if that investment had taken place. Now, we have to recalibrate the whole fiscal numbers to ensure that into the medium term, we can have substitutes in terms of revenue for that. And what is even depressing is that you don't even know when the project is going to come back into the picture for you to be able to recalibrate your numbers and see how that revenue will come in. So you read the fundamental question about where are the Africans in the space? I mean, where are our business people in the space to ensure that we can participate in the extractive process and ensure that some of the value is actually retained? I think that realization has dawned on us for a while now, and that is where you see local content policies sprouting all over the place, and it's more or less become a copycat approach where we just copying documents, and we haven't really found a strategy to ensure that we actually build in capacity that can endure and resilient to some of these shocks. The fundamental question to ask at this point is, how are the local companies faring? I mean, when the contracts are not coming, when the businesses are not thriving because the foreign investors are not investing. And that should lead us into the proper conversation about how do we build resilient local companies and not just local content that thrives on the back of political decisions and established documents. But practically, we have local businesses that think through the process, understand the risks, and are able to plan accordingly to survive in times like this. And I think that is where the gap is. So you often will see people fronting for foreign companies. So you even still struggling to really know how much of your money, of the money invested offshore, is actually staying in your economy, because people are happy to front, they don't have the capital to participate in the sector. So that conversation is quite key to ensure that we build sustainable companies that would participate and actively engage our people, our youth, and also build on technological advancement in the space as well. So Talo also was programmed to do some investments to optimize this field. That investment has also been put on hold. And again, those companies who have not been performing because they don't have capital, even though they have oil blocks, they don't have the money to actually go and do the actual drilling. Now, on the back of COVID, they have an excuse to say that, oh, we are not able to drill because COVID is here. But we do know that these companies don't really have capacity to do the business. So you have all fields that could have been more capable and competent companies, but these companies are going to still hold on to those blocks because they have a perfect excuse not to deliver on anything. There was another point also that I can relate to Ghana's situation. The sovereign wealth funds that actually insulates countries in times like this, and also smoothing mechanisms that helps to alleviate some of these problems. Ghana has a law that actually allows us to do expenditure smoothing and also savings for future budget and generations. What we have failed to do over the years is to really optimize those laws to ensure that we have significant buffers that allows us to smoothing the shortfall. We're now saying that we're going to have 1 billion shortfall, and all you had in your account to smoothing the budget is 300 million. So it means that the fund to begin with is not effective to be able to address these challenges, because over time we have the appetite to spend and not plan and save for situations such as this. And also when it comes to the long-term instruments like the Sovereign Wealth Fund, you raised the question about, I mean, where are we investing these monies? Do we have the frameworks to be able to invest these monies locally? And this comes back to the point about ensuring that we have the capacity to properly invest these monies. The danger really is that if you allow countries to invest in their country, then it becomes part of the political process and abuse of those monies. So thinking through it, how do we build our systems to ensure that the economies can absorb the money, be prudent and efficient at how it is utilized to benefit the people? Because if you are borrowing at 10, 12% on the market, it doesn't make sense to put your money out there for 1%, 1.5% interest rate. But the danger is still there that it could be abused because of the inefficiencies in our political system and how revenue is utilized. And therefore, you wouldn't achieve the effect that you actually anticipate to have by investing locally. So we need to now begin to have a conversation on what structures need to be in place, which banks will be effective at managing our sovereign wealth funds within our system, so that we can optimize the benefits that we are getting from our resources. And I think I can leave it here so we can open it up.
Thank you very much, Benjamin. And I want to thank all the panelists for putting across a menu of different explanations of information, of analysis, and also putting forward some of the important strategic questions that impact so deeply on not simply growth and recovery from COVID-19 context of crisis, but also more long-term structural change and development as well. We have, I'd imagine, probably about 25 minutes I can allow for the next, for questions and answers and so on. I think there was supposed to be some indication of hands up. Maybe the host can help me do that. But there are a number of questions which have been written, which maybe I throw back to the presenters. One is to do with some of the things that Ben said in terms of contingency mechanisms and so on. How to save for a rainy day, how to ensure that you invest in some premiums that can actually help you reap when things are a bit leaner and more difficult and so on. There are other questions relating, especially to Winifred and Ikal, about the lessons of communities in terms of the pressures that smallholders are facing vis-a-vis land acquisition and so on. So maybe if they can come back on some of those issues as well. And Ben's last point about absorptive capacity, including the institutional and development planning arrangements as well. In terms of the institutional arrangements, he mentioned the capacities of local banking and local financial institutions to actually anchor some of these developments that we'd like to see. One of the questions relates directly to asking about what the interconnections are between the local financial sector and local banks, local financial institutions, and the oil and gas industry. So those are some of the questions that have come up. I think that perhaps with the, sorry, let me just check if another one. There is a question to Benjamin about practical ways of developing not simply the local content, but the local companies that you talked about. So that as well. And I don't know if the host can also, after the first round of questions are answered, the host can also tell us whose hands are up and maybe select a few so that we can continue. For now, if presenters can take up some of the issues that have been raised, we can start with Ikal, Winifred, Benjamin, and then Salum. I leave Salum to last only because it doesn't appear as if any direct questions were targeted at him. I think, so let's go that way. Yeah, okay.
Thanks, Gretri. Thanks to my fellow presenters. It is quite a rich menu of issues. In regards to livelihoods, that's why it's a critical conversation. Ben and I have had this discussion as Ghana is now moving to where we are in terms of going to start acquiring land. And what does that mean in terms of food production? Is the choice supposed to be made by government and investors? And do we have the data necessary to decide whether we move away from food production to go into exploration and extraction? So I think those are key things that perhaps more work needs to be done just to deepen. But from our case in Turkana, based on, it's a 25 years of drilling for this oil. And after 25 years, this is in our lifetime possibly, that there will be no oil. And so if then we are disrupting livelihoods and in 25 years, there is nothing for the local community to come back to, having seen what we've seen in 10 years, I think each country, each community has to have that thought process around why should they lose their land and livelihoods for oil production. I think that's something that a lot of work needs to be done. There's not much research. I think the research goes into land acquisition, compensation. And again, what Winnie was saying, what are you compensating exactly? Who's determining the market prices? And if laws are being put in place to skew as it is, it's already skewed. The price of land and investment is already skewed. You see every time we talk about how much the company is valued and how much the land is valued. Somebody is setting, it's not the people making those decisions. So I think those are concerns we have to keep trying to big, so what happened last year, both in East Africa with the drought and then with the cyclones in the southern of Africa. We can no longer talk about oil extraction, resource extraction without the realities of the climate crisis. And that's a discussion I think we have a chance to engage in unlike many other countries like India who are struggling to engage with it now. So for me, I think those are key things that when we talk about resource governance, what is the price of oil, what's the benefit, we have to ask ourselves, what is the cost? And the cost is climate costs, and the cost is livelihood costs. As long as those are not on the table, we cannot have honorable, but for a forward-looking discussion. So I think those would be my 2 points.
Thank you very much. Winifred?
I think first is for investors and government to know that people have an agency. And so when they are coming to these communities, they should come to this understanding that these are people that have lived in this area and have rights, and they are stakeholders in the industry that we are trying to develop. Because in many cases we see, companies coming and saying, we want this land. And we are going to provide you jobs, and we are going to provide you everything. And the communities are the receiving end of every piece of information, and rarely influencing the kind of debates and the kind of exchanges that are going on. So that for me is a starting point if we are to have inclusive development, and if we are to take communities as shareholders that they are in the natural resources that we have. And the other thing is for companies that come with all these manuals quoting international standards, IFC. There's nothing AFC about someone growing potatoes and selling them and paying school fees for their children. I think the debate should be as real that affects people's lives. And that often is missing. The actions here and the kind of investors here are feeding into the global picture. We have, for example, the East African community. We have Taro working in Uganda. We have Taro working in Kenya. Why wouldn't we be talking about Taro as an investor in the East African region? And why wouldn't we be talking about negotiating with, Sino or Taro users, countries and competing against each other and providing a better deal than the other, which at the end of the day really works to our disadvantage. So I think that's one. At a national level, we should be, saying our borders are open, we can negotiate, we can learn from our brothers and sisters in the East African community, but at a community level, we need lives to continue. People really want development, but we tend to think that development is coming from outside and does not care, at the lowest level, but also as a block. I think we should be negotiating as blocks when we are dealing with investors that have much more power and much more money and much more experience than our emerging economies.
Thank you very much, Winifred. Benjamin?
Thank you very much. I think 2 questions directed at me, and one is the insuring against price risk, and which Mexico just made a win because they actually hedged their price. There are positives and negatives to hedging, and countries have to be aware of that and ensure that going up, you hedge quite a low price that would also strain your budget, and also the potential for you to have made a windfall. So what we have advocated is for a mechanism that allows you to use a part of your oil to hedge as insurance, and not the total volume or expected revenue, or hedge against the entire production volume that you expect in a year. For example, if you go and hedge today at $40 and oil recovers 2-3 months down the line, you would be losing significant revenue. So we have to really measure the risk involved. The most efficient mechanisms are what are usually in law about having reserves that allow you money from savings to smoothen your budget. And if you are conscious about building those funds, you wouldn't be worried about hedging, but rather understand that this is an industry that has its own challenges and quite cyclical as far as revenue is concerned. So then you're not worried about whether prices will go up or drop significantly and not expose yourself significantly. And Ghana has made a lot of losses hedging in the downstream in the past. So it tells you that it's not a win-win all the time, but you can be exposed to losing significant revenue when you go hedging. So we have to be aware of that, but we could do maybe 25% hedging to ensure that at least some revenue will come in when you have a situation like COVID. There's another question on local content development and what the practical approach could be to ensure that we build more resilient local companies. What I keep saying is that, you know, when you are born, even as a human being, you have to learn to crawl, to stand, and then you start walking. But we tend to want to skip some of those processes, which are also applicable in the industry. We want to walk quickly. We're imposing all the responsibilities on the companies, employ X number of people in 5 years, give contracts to 10 companies in the next 5 years. I mean, it tends to be quite prescriptive and not really sitting down to see how we can practically develop local businesses and people to participate in the industry. For example, if you have oil and you want your citizens to participate in the industry, your first approach should be, how do you address challenges with education, right? And in doing so, you are careful not to sacrifice the sector that is already educating people, the education sector. And now you have the oil and gas ministry now becoming the sector that is actually developing skills and capacity. When you do that, then you also limit sustainability of the approach, because then when oil production goes down, the ministry is not getting enough revenue, then they cannot continue to develop the capacity as you want it to be. So you rather want to develop the educational sector. Let the managers of the educational system understand that there is an economy that has been a component of our economy that has been reintroduced, and therefore we need to build the relevant capacities that can participate in the industry. For example, a lot of scholarships have been given for Ghanaians to go study abroad. Ghana and go to institutions abroad. The only difference you see really is the infrastructure and not really the people who are teaching. So you have access to library, high-speed internet, everything is at your disposal for you to be able to learn and be trained. You know, and instead of focusing on building those institutions locally, we spend so much money that can actually build a high-class institution to benefit the people even beyond oil. You know, so we have to learn to see how we can link the entire sectors of the economy to the oil, so that even when oil is no longer there, you would have built the agriculture sector. To produce it doesn't make sense for our industry to import vegetable because the foreign workers will not trust the source of the vegetable that they are getting. But you want to interrogate it to see how do you prop up those sectors to be able to take opportunities in the sector. And also transparency around how local businesses enter into the space is also important, so that you don't have politicians hijacking the space and they don't survive because the attitude to actually participate and survive is not built into the DNA of those companies that are actually participating. So you want to encourage participation. And also from our studies, what we found is that you have these local companies coming up, they don't have the capital, but the attitude and culture to cooperate and build the needed capital that allows them to take up the opportunities, they don't want to do it. People want to own their own businesses and go solo instead of partnering. And these are things that regulators need to start engaging local capital for them to build partnerships that allow them to take up opportunities in the sector.
Thank you very much, Benjamin. If I may, since there were no questions, if you like, immediately directed at Salum, maybe I can point a couple of the ones that are still outstanding to him.
Maybe there's one that I can also attend to from Ian.
Okay. Okay.
The risk of government signing deals that could be disadvantageous for the future.
Okay, but if I may come to that, but just to give Salum a chance,
right? Okay,
to contribute. Salum, as obviously you've been a keen listener to the discussion so far, and there are at least 2 or 3, if you like, broad systemic questions that are still hanging, in a manner of speaking, even though they've been taken up in a variety of different aspects by our very competent panelists. One is that how do we improve our position in the current arrangements, given the disruption that has taken place? So yes, the downturn in oil prices, there is bound to be some degree of recovery down the road. For example, right now, the reason why the prices have gone inched up marginally is because some of the inventories, in terms of the stocks that are held, let's say, for example, in the United States, are going down a bit. So the idea is that demand can rise a bit more, or that there may be some indications of, recovery in terms of economic growth and so on, and so on. So what is it that we are taking advantage, or is there anything we can take advantage of now, that when things change a bit, when there's a bit of uptick, whether it's in demand because of the stocks, or whether it's because winter comes in the global north, and there's greater energy demand. Is there anything we can do to reposition ourselves in the current context to gain more from the current arrangements? That's without necessarily changing those arrangements in any fundamental way. But then second to that is to consider more fundamental longer-term changes of the kind that our colleague panelists have talked about. One of the points that Benjamin just ended on is the question of cooperation between different local players. Now we know that some of the transformation of companies and enterprise development in, let's say, Southeast Asia in their transformation has been the role of governments and regulators in, if you like, encouraging, or some would put it even more bluntly, forcing different countries to agglomerate, to build their capacities and so on and so forth. And that whole point about aggregation relates even to the smaller scale. Can there be collective equity in the land whose prices are appreciating in the communities, for example, instead of somebody else benefiting from it? So those 2 questions. Is there anything that we can do to improve our returns in the current arrangements? Number 1, because there's bound to be a recovery, however volatile it is, there will be a recovery. And then number 2, what are we doing to reposition ourselves by way of building on our collective equity and our collective, the enterprise capabilities? You as an expert in, in the Tanzanian government, maybe you could first address all those. Can we hear you? I'm not.
Yeah, sorry. I thought to unmute. Yeah, that's a pretty tough question for me, and I haven't thought of it, of what would be the possible effort that can be done, at least to restore the situation. But what we have seen, at least from the practice, and people are taking advantage. For example, buying out. For example, I'll tell you the deal of Total and Tallow. This deal was supposed to be $9 million. Total has bought Tallow, the entire Tallow, for $570. You can imagine. And the Ugandan government has only got $14 million. And before they thought like 80 million was not enough, they were supposed to get $165. This is what happens. So if the companies with more money today, with more capital, chances that they could be able to buy the the small companies that are struggling at these low oil prices. And some of the contractors have companies that have entered contract. For example, in the USA, you know, the oil prices went down because some of the contract that were the production contract they had were more expensive than stopping them, to produce. So they would rather pay the people to do it rather than paying production. So if there's anything that can be done, probably I don't know much what can be done today to cover those losses. But one thing that I've seen, for example, in Tanzania today, as a net importer, we are benefiting from that. Today, we used to buy oil maybe $1 per liter, but today we're buying on less than a liter, less than $1 per liter. So you can imagine that if we could do better in Tanzania, if we had a strategic reserve, for example, we would have bought oil today, a lot of oil today, and reserve it for future. And this money can be used, for example, to save, because in Tanzania today, we have a bigger infrastructure projects, and we are much more advantageous on the low oil prices. So we're spending a lot of money, for example, a lot of oil in the building and hydro electric power in Tanzania, which is going to produce about 2,000 megawatts. So you can imagine. So if I could advise the government today to have a strategic reserve, which I do not know if you can do it overnight, we should have this plan before. So, but we're probably going to miss this opportunity for strategic reserves. Our oil reserve is only maybe 3-4 months. You can imagine. So we should have a reserve that can last maybe for 2 years, and we don't have. So if there is anything that we could do, especially for net importers, I don't know what I could say for net exporters, but for us as importers, we would need more strategic reserve. I think that's answer your question. I don't know, I've tried it, but it was a tough question, I'm sure. It needed a lot of references, and I haven't been much able to update myself on what can be done in terms of restructuring the current deals. Yeah.
Well, I mean, no, I think your practical experience counts. You just, honed in on one potential aspect, for example, in terms of holding reserves and so on. And I think it's very relevant because the reserves themselves offer not simply strategic capacity, but they affect pricing, they affect a whole range of different things and so on. So I think that's important. And I think that, the idea here was there are a couple of questions. There's only about 20 minutes or so to go. My suggestion would be to give another minute or minute and a half or 2 minutes to each of the presenters to, go around. Maybe you can also look at some of the questions that you think, Ben, for example, was eager to elaborate on some point. Maybe if you can take a minute or two each to sum up, and then I can try and summarize and put forward some of the the next steps, the issues that we may want to take forward, collaborating with each other going forward as this crisis and the situation that we are in unfolds. So if that is okay, can I ask, do you think is it acceptable to presenters and perhaps participants? I don't know how they can indicate quickly to maybe take a minute or two to round off. Professor Nuvunga, Adriano hasn't come back. He's gone AWOL.
Yes.
Probably rebalancing the whole Mozambican oil industry as we speak. But So Ben, is that okay? Can we take final round for all of you, and then?
Yes, it works. We're hoping that we could take maybe 2 hands up. So maybe we can do 1 minute each, and then we can take 2 hands from the participants.
Okay, all right. Okay, or why don't we do that first? Why don't we take the 2 hands from the participants?
Okay.
Yeah. So how do we do that?
So invite James in if you're still available to ask a question. You have allowed him. Okay, so James, can you ask a question?
Yes, hello. Thank you very much for the conversation. I had shared a little in the post what my question is, but I would like to bring to the light the fact that during this pandemic, we've seen tallow oil positioning itself to exploit both Kenya and Uganda. Over the last 5 years, Talo has been having tax disputes both with Uganda and with Kenya over capital gains tax. And during the lockdown, it's the time they found right, in their own view, to sell to Total here in Uganda at a very huge loss, costing us over 85% of the capital gains tax we had earlier expected if the sale had been done in September last year. And that has been explained by the colleague from Tanzania. For Kenya's case, where such a deal wouldn't be struck because they had actually been planning to sell to Total even in Kenya, though it never came through, they decided to evoke the force majeure provision, and now they are shaking down the tax that they will have to pay pursuant to the force majeure provision. And legally, they will have a good case and will successfully shake down Kenya's entitlement in terms of tax, because they have a valid act of God they are claiming to exploit. So I wanted to know what the panelists here look at in respect to this case of Talo exploiting the pandemic to shake down in terms of what value Uganda and Kenya are getting out of their oil, or if possible, if there are any other cases beyond Talo's case, Talo exploiting the East African region, maybe in Mozambique or in West Africa, where we see oil companies taking advantage of the drop in prices and all other circumstances that have occurred during the lockdown and the pandemic in general. Thank you.
Thank you very much, James. Perhaps we can take the other person who's showing the show.
All right, so hello, Henry. If you're having challenges, then we will move on, because I think you also typed your question so we can address it at the same time.
Okay, which one is it?
Yes, my question is, how do we overcome COVID-19, the energy sector, as Africans without foreign aid?
Okay. Yeah, you missed exciting.
Speaking in
okay. Right. Henry, thank you very much. Okay. What I'm going to do is ask all up and come back. Adriano, maybe you last. I will give you some time to catch your breath and tune in what others are also saying, if that's okay with you. So I'll go in the order of in the following order. I'll go with Salum, with Winifred, with Ikal, with Benjamin, and then you, Adriano, last. Okay? So just a minute or two each, and then I'll try and wrap up as well. Is that okay?
Yeah.
So,
yeah.
So Salum can start, and then we go that way. Salum, I think you've unmuted again. This we're talking about transparency, but you like your voice to be very secretive, which is a bit disturbing. But you know, please. You're still muted.
Now, can you hear me? I'm there.
Thank you.
All right. I would like to thank you very much. Thank you, Ben, for organizing. Thank you, moderator, for full discussion. But one thing that I always, we've been attending these discussions, and the most valuable experience that I've gained, and I always see, is there's a lot of important discussion that we put in place, but in oil and gas sectors, this is a heavily dependent sector in terms of foreign investment in Africa. And we know that we definitely cannot do much without the money and the skills that are coming from the international oil companies. But how can we actually come and overcome and come to the point of having a win-win? And when we talk of win-win, normally people would think that win-win is 50-50. But to me, win-win is actual what you put on the table and what you want to come out. If you put 20% out of the deal, then obviously your win will be 20%. And if somebody else put 80% of the deal, that will be their win out of that deal. So in that case, we need to make sure that we learn the importance of corporations, negotiations, and understanding the fact that we cannot do it alone, and the foreigners cannot do it alone. But the resources are everywhere. It is important that before, and we have this African group, of us who started in Australia, and we are all discussing, and we were looking at a point where can African Union, for example, come up with the guidelines of what we need to, how to negotiate. If you come to Tanzania, if you go to Uganda, if you go to Ghana, you should have the same terms of negotiation. We should have the guidelines that guide Africans on how to negotiate on our natural resources. In that case, probably we might get a good win or a proportional win of what we are supposed to get. So it is important that we come, but as a single individual African country, probably we'll continue discussing and come up with a so good contents of discussions, so good points of discussions, but yet at the end of the day, we'll be complaining about the local content participation, about the environment damage, about the economics of the pastoralists, economics of for farmers, economics of peasants, and the majority of our people who are not probably in our class and who suffer the most. So it is a key that we learn the importance of negotiation, but the most important thing is African Union should come up with some guidelines on how to negotiate and what are the good terms that are in correspondence to our environment in Africa. Thank you very much.
Thank you very much, Salim. Okay, is it Cal? Sorry, Winifred, next. Have I mixed it up? Or?
Thank you very much, panelists and the audience that ask resources. We are the rich guys here with resources. But the resources we have will go to waste if we do not invest in exploiting them for our own benefit. Most countries have local content laws. They have quotas, they have provisions for minimum acceptable standards, but we are not investing into reaching those minimum standards. We have it on books, but in practice, no one is investing in small businesses, no one is investing in medium businesses so that they can take part in exploiting our resources. The human capital, we have Africans that are very well educated, that we could educate so that they negotiate in 15 years time, 20 years time, 30 years time. But again, we are not investing in that, and we are rushing to exploit our resources. And unfortunately, we are not making very, very good decisions. So our resources are not going to run away. I think we should take time to invest in having the best infrastructure, the best people, and the best skills so that we can benefit from this. With or without COVID, really, it should be about how do we benefit from our resources. The second thing, of course, is about negotiation, like my colleague said, and as I hinted on. Uganda cannot do it alone. Kenya will not do it alone. Tanzania will not do it alone. Ghana will not do it alone. But how much do we learn from each other and shape the agenda as a continent? If we are to borrow from the mining, we have the African mining vision. But what do we have for the oil and gas sector? That we can say this is where we want to be as a continent, and this is our 50 years plan. So, COVID it provides us lessons about the volatility of the industry. The shares have gone down, but it also challenges us in terms of being sustainable. What if there was no development partner? What if these carrots of this world were not there? Wouldn't we exploit our resources? So we should have the confidence that yes, we come from a very strong position. We have the resources, they need us, we need them, but we shouldn't always go as the weakest party in any negotiations. And at the end of the day, development, if an ordinary person cannot afford a better meal after the discovery and exploitation of oil, then that is not development. Development is not, glassy buildings and four-wheel drives that are running up and about in the cities, but also about, how many children are able to go to school, how many can access medical care, how many can, can have a better life because the resources were developed and putting them into consideration. So this is an opportunity that, the lockdown, the COVID pandemic is really an opportunity for us to go back and say, we need to be smarter because anything can happen. And if anything happens, we should never be losers. Thank you very much.
Thank you very much, Winifred. Unfortunately, I'm going to cut Ikal and Benjamin to a minute each. Ikal, and Adriano as well. So, go on.
Quick ones. I think for me, it's really, as everybody says, we think about developing an agenda that goes beyond the country. So what does the continent agenda and what are the spaces that we can have a continental agenda? Why is it that if, Nigeria is going to sell, gas outside and yet, or Ghana, so the whole connection has got to be there. I think we have to start to ask ourselves when we talk about sustainable management of natural resources, sustainable for whom? Who's deciding what's sustainable? Because then if the control is not local, it's not by the people themselves, then we're creating an idea about sustainability. And so we have to think about that. We have to really think about the geopolitics. I mean, Venezuela, for what we know, is one of the countries with the most, largest quantities of oil. But then because of the geopolitics, then someone makes a decision of what happens to their oil, where they sell it and things like that. So, and looking at the COVID situation, we've seen the inequalities within our public structures, whether it's healthcare, access to water, housing, and if the resources, whatever they may be, I'm now giving up on the oil conversation, but whatever resources they may be, if they don't contribute to strengthening the public sector and allowing each citizen, not leaving any citizen behind, allowing for producers to be part of the conversation, landowners, rural populations, and especially women, I think then we are constantly just trying to talk about resource governance, but resource governance for whom and by whom are the key questions.
Thank you very much. Benjamin?
Yes, I think I will merge two things quickly. And there was one question on, the temptation for governments to negotiate bad deals in the midst of COVID-19. And that is it's a situation that will pass, and we have to really examine it carefully before we give incentives. That situation within certain contexts that will require that incentives are granted. But the litmus really is transparency around the conversation on what incentive you're giving to a company. And therefore, if you want to give incentive, have a broader conversation I don't think we have to hurriedly lower the fiscal regime because of COVID-19, because exploration between now and probably when an oil production will come on stream, we didn't have this same low oil price, and therefore you're not able to justify why you have to remodel your fiscal at this point.
Thank you very much, Benjamin. And last but not the least, Professor Adriano.
Thank you very much, and apologies for being absent a few minutes. I am back, and the question is whether Mozambique has domestic companies that can supply with the necessary international standards quality. That's a big challenge. That's a big challenge. It's an opportunity for African private sectors to develop around good, sound local content policies, which is not much the case in most of African countries now. And that also poses further challenges to private sector. Mozambique is moving slowly. Governance around that needs to improve. Incentive structures for that, one would have expected that COVID-19, its impact, it would be used as an opportunity to develop a new way of thinking in African leaders, but I mean, you quickly have seen them moving, running away, running to Washington to negotiate new packages. They're important, of course, but they will further make things complicated around Africa's already distressed debts. And this will further complicate things, not only for industry, but for countries globally, and the possibilities of countries maximizing the take from these endowments. We say that the oil and gas industry remains Mozambique's opportunity and is still given its geopolitical and strategic location, easy to connect with markets, geologically speaking, structures is easy to pipe. So I think it remains an important asset around which Mozambique can still think of modeling its development. But governance matters. Governance matters, not only for Mozambique. And this, it tells you how and why we can quickly have the mining vision, but we're failing to have
I think that the organizers, the hosts, have touched on a very important thing, and perhaps we should try to find ways to take the conversation forward. I think it justifies organizing this conversation. There are many things that have been raised that we haven't been able to delve into, but at least we've attained the point of departure, which allows us to begin to delve into the strategic questions around equity in the form of finance, in the form of other productive resources like land, around enterprise construction, around engaging different aspects of our economy, of our communities, of our people, around the arrangements that exist between us and other players, the tax regime, the issues of debt, and so on and so forth, the trading regime, hedging, and so on. So there's a combination of different factors, which I think, broadly speaking, if we begin to interrogate a bit further, it gives us a handle, not simply on the long-term transformations that we would all like to see, but on the immediate steps in the here and now in the context of COVID-19 that sets us on a better path towards those transformations. I were handicapped in being able to come to those details, but I think Benjamin and the Africa Center for the host ACEP are ought to be proud of what they've arranged, and maybe we should throw back the challenge to them of convening a follow-up conversation as quickly as possible, and also maybe the participants can contribute different resources that can be shared among among each other, so that we build another threshold of thinking, of reflection, of discussion before we take the conversation forward. It's 1 minute past 3, which is 1 minute past the time that we were supposed to close. So I would probably have to end this now. And once again, thanks to everybody for participating. And please be sure that this is just the beginning of an extremely important conversation. And in a sense, its importance is attested to by the fact that we're not able to exhaust some of the more critical things already, even clearing the deadwood, getting to grips with the empirical factors as they're unfolding. It has exhausted 2 hours of a very rich conversation as well. So please, no regrets, even if we didn't fulfill our full agenda. Let's take it as a signal, as a call from the gods that we need to continue with this conversation, and that we throw the ball to the lap of ACEP and all of us to ensure that this happens in the shortest possible time. I wish you all a very good afternoon or good evening, according to wherever you may be. And thanks very much once again. Ben, do you want to give us some closing remarks before we go?
Yes, briefly, and thank you so much, Mr. Thano, for leading this conversation for us. And I want to thank the 105 participants who actually logged in to listen to this conversation. I'm grateful to the speakers as well, who have given us the right perspective and the context as they are in various countries. And I think, like you said, it sets the pace for us to begin to be more granular on what the cross-cutting issues are, and pick that up for further conversation and engagement. And I think we will continue to do that and come back to you with the agenda as it unfolds, for us to have a more sustainable approach to oil and gas governance in the region. So not taking much time again, I want to say thank you, everybody, for participating, and hopefully we'll be back talking soon. Thank you.
Thank you very much.
Have a nice day, everyone.
Bye. Thank you.
Thank you. Bye. So you can end it, right? Right.
No, you should end it. I can't end it.
Where do I end it? Can we end it?
Go to end. It's just go to end.
I've covered it with something.